Hi, this is Eric Dunavant with Dunavant Wealth Group, the Dunavant Wealth Recap for March 2012. Glad to have you with us again. February was another good month for the market. The S&P 500, which is an unmanaged index that cannot be invested directly into, was up just over 4% for the month. Shows the year here, we've got the S&P 500 up just under 9% for the year. And so far, it's just been a quiet but steady rise in the markets. On the economic front, I think we continue to see kind of a muddle through economy, and that may be the word we use quite a bit this year. We get some good news and we get some bad news. Jobless claims still remain below 400,000, and the report we got in the last few weeks was the lowest it's been since March of 2008. Unfortunately, we also got durable good orders, which dropped the most in 3 years, and were down 4% earlier this week. Good news, fourth quarter GDP got a revision to the upside to 3% from a previous number of 2.8. I think the most interesting thing that we'll keep an eye on for the remainder of the year is oil prices and how that ends up affecting the consumer and the economy as we go forward. And this month's news or noise, as I mentioned, the markets are off to a great start this year. Don't get complacent. More than likely, the market will go down at some period this year. And if history is any guide, we know two things will probably happen. If it goes down, it's probably going to go down more than 10%. As a matter of fact, since 1946, the average drop in the middle of the year is about 14%. The second thing we know is when and if the market drops, when it does, the news media is going to try and convince you it's the end of the world. Our job as advisors is to help you avoid behavioral mistakes, and reacting to a news media or a simple mid-year correction in the market would be that. Behavioral mistakes are one of the leading causes of underperformance, and our job is to help you get through that. This month's true wealth tip, it's a time of year to kind of think about retirement contributions, especially if you had earned income last year. Consider making a contributory or Roth IRA contribution. You have until April 17th of 2012 to make a 2011 contribution. If you're under 50, you could make a $5,000 contribution. If you're over 50, that number goes up to $6,000. Of course, income ranges are going to determine whether a Roth or contributory IRA are better. So give us a call or call your CPA if you need some direction in choosing which account might be better for you. If you're self-employed, you still also may have time to make a 2011 contribution. Check with your CPA or your advisor to get some more direction if that's something you're considering. For those of you who are already thinking about 2012 and your 401k contributions, they increased the limit by $500 this year. You can go up to as much as $17,000, and if you're over 50, you get an additional $5,500 catch-up that you can do in addition to the $17,000. As always, here at Dunavant Wealth Group, we take time to pray for our clients. If there's anything specific we could be praying about for you, would you give us a call or email us that prayer request? We'd love to pray for you and your family. Thank you so much for joining us. We'll see you again next month. Securities are offered through LPL Financial, member FINRA, SIPC. Investment advice is offered through Dunavant Wealth Group, a division of Cardia Planning, LLC, a registered investment advisor, and a separate entity from LPL Financial.